Good morning, welcome to Morning Outlook. This is Kim speaking on Tuesday the 13th of February. So let's get cracking and look at these markets. First things first, we've just seen the UK job data coming out. In fact, I'll share this with you because you'll see how much green is sitting there. Okay, so unemployment rate drops to 3.8. All these figures, I mean the average earnings 5.8. I was just talking in the room here. This is very inflationary. And well, I just had a scroll through here, and traders are pairing wages on Bank of England rate cuts this year after jobs data. Basically, they're not going to be cutting interest rates whilst inflation, in terms of numbers like this, are coming through. I'll be very surprised unless the CPI suddenly takes a bit of a dive. But it's this, yeah. It's not good. I don't agree with the way they do the inflation, and based on the 2%. Personally, I think it's flawed, and particularly when we've got times like this where people have not had any wage increases for years, and then suddenly you've obviously got this year. There's a bit of catch up, fractional catch up, and it's really emphasised on numbers there. Anyway, let's get on and look at these. There's nothing. Oh, this morning, what else is coming out? Let's do that as well. Oh, it's always good to do that. So the key thing this afternoon is the US inflation. Talking about CPI, the Consumer Price Index, coming out later. There could be a relatively quiet, moderate morning, but this inflation data is what it's all about today. And we've got tomorrow, we've got the UK CPI. So before I start talking, so I thought I might as well cover that now as well. So watch out for both these figures. The 130 number, very, very, very key. So we could see some big old moves. Could be as dull as dishwater, but normally we're going to see, I expect some volatility currently. Okay, so let's look at the markets, and technically, well, the euro is continuing its ride downwards. It's interesting actually, I looked at a different broker's feed last night compared to this one on the dailies, and it's partly, I know why it is, I just remembered why it is. It's because they start at midnight, and as opposed to 10 o'clock at night, so this is a rarity. These days, a lot of brokers, their feed starts at 10 o'clock in the evening. So what we're seeing there is quite a differential. So it will make a difference to daily pivots, just to bear that in mind. But for now, let's just stick with 10 o'clock. I'm almost resigned to this 10 o'clock open and close of the markets, because that's when it happens. So euro looking like it's got some scope. I mean, we could be drawing trend lines across the lows here, or should be drawing trend lines across the lows here. You can see actually. Okay, that's the only significant low. This low. There's the significance of these lows is I can't be putting trend lines across them at the moment. You see though that they've pitched through. This is significant because it's a higher low. Basically, price has gone higher than the previous high before the low. It hasn't here, so this is where the trend line goes. Anyway, it's holding things up there at the moment, but maybe if it doodles down, we'll see. Got to be, as I say, so careful today with the inflation data coming out later. The euro on the hourlies here. Well, it's run up, hit the daily pivot here. It could roll over at some stage. Just be careful, wait a little while. We saw it yesterday with these markets, the 7 o'clock bar. Did it on the euro here, did it on the pound. It was rallying up, and then all of a sudden they sold off. Well, that sold off pretty decently in the end at 8 o'clock. But it was going in its little old upward trend at the time. But it did break. Where to today? Well, the way this is shaping on the bigger picture may be to the downside. The pound, well, things have changed here, and I've been seeing this pushing up and almost expecting it to push up. Sentiment, the big money sentiment, has gone a bit more bearish on this. It's been sitting there just that little bit more bullish, but it has broken the highs here again. I was talking about these yesterday, this sort of level of highs. How well it's going to push on, we'll see, but it's not massively favoured, and well, we've seen the data out there. Perhaps that will change things. It's reduced the potential of interest rates, particularly early interest rates in the markets. But it's put another little higher low in there. We could get a continuation later. On the other hand, it might just continue in its chop, particularly with the CPI out. Okay, US dollar yen. I don't want to be trading in the pound, basically. Dollar yen, still see the potential for this up further, and it's pushing that way. Sentiment all looks high. I was looking yesterday and I was hoping it was going to be coming. It actually went off its daily pivot yesterday. I was looking for it to come back to its weekly pivot. Just not happened. I'll scrap that. That was going to be the point of looking to buy, but it just never did it. It's just tootling on there slowly, pushing up there, and well, continuing to look soft. It's a shame. I was hoping that would have been a nice little position trade there, but we have got the risk of inflation. The Australian dollar here, well, I'm still looking for this to break to the downside, but again, inflation. Got to watch this carefully. It did and has formed a bit of a wedge there. It's done the usual fake out. They're very unreliable patterns. When you get these sort of patterns, it will fly one way but then suddenly come straight back in again, as it pretty much did yesterday, and it's a mess. I don't even if it's in the direction of the trend, I just don't trade them. So the coming down to the hourlies here, it is looking softer on the hourlies here. Looks like we've got potential for a continuation to the downside. Already down to its R1. I'm just thinking here in terms of this could just slow up for the morning. I guess it's pretty similar across these markets. US dollar CAD, still there's nowhere to go on this for me at the moment. It's a complete mess. So I'll shuffle on. New Zealand dollar. New Zealand dollar selling off a little bit here as well. Just pushing down to lower highs coming through here. This has now gone back into bearish state. I was bearish on this, but with the news that was coming out and the potential interest rate increases, etc., moved out of it. But maybe it shakes me out of it. But personally, the sentiment has gone a bit bullish on it. I'm sticking out of it, but it is looking a bit soft at this stage. Swissy got a bit of a jiggle on this morning, getting jiggly with it, and it's US dollar Swissy, US dollar pushing ahead there strongly this morning. Wow, I haven't fully seen what's caused that. It must be something to do with the Swiss National Bank at the same time, but that's well, it's all in trend. Unfortunately, I hadn't got a trend to get into the swings on this. It broken, missed it originally. Was waiting for it to be above its yearly pivot here. Something might still come. Euro yen, this still looks potential for the upside. Now there's a few of these. The euro yen, obviously the pound yen is going to be pushing up stronger on this at the moment and pushing up, but we've got all of these yen pairs. Obviously the yen itself are all similar pictures, pushing up here. So all the yen pairs, well, most of the yen pairs are pushing up at this stage, and they look like they've got some more potential on the longer side here going forward. Now maybe that you wait a day or so to get in this now, or wait part of the day at least, but to say it's got scope for continuation. Okay, I'll run through the rest of these in a short while. There's the majors though. It's going to be sticky on days like this with the inflation coming out. So let's look at the price of gold here. Gold shoved up here. Now I was looking yesterday at gold. Yeah, sentiment's got a bit more positive on it again, but it's not really reflected in the price action, and it's ugly and it's horrible, and I'll leave that. Oil, the sentiment's bearish, but it's still trickling up there at the moment, and trickling is the key word here. It's really not going too quickly, and it's sitting around its quarterly pivot there. So there's the quarterly pivot, just holding it up a little bit, maybe slowing things up. But again, I'd be waiting for 7 o'clock. I'm still sort of, well, I have been sitting here waiting for it on the more bearish side. It's not broken down. It's continuing to ride to the upside at the moment. Things have gone a little bit quieter in the Red Sea as far as I'm aware, but it may just be that I haven't read the news. Anyway, I was potential for oil disruption, etc. Still got the upside there, I guess. Anyway, S&Ps. So S&Ps, I was looking at the sentiment of the S&Ps yesterday. Now this is not a case of let's all sell it now, because it's pushing up and it's in a very strong upward trend. But what I did notice was sentiment. There was a significant change in sentiment yesterday. Now, yesterday over last week, it not only did we see a lot of shorts close, which reduced. Shorts close, longs close, which you can maybe in profit taking. When you see a change in the the long positions on something like this, it might be some profit taking. But the shorts were increased, and there was a swing towards the short side of the market. So there's buyers into shorts, which should suggest, well, they might think it's toppy time, but they can be wrong as well. Just be careful of this. It has had a mighty rally. I'm starting seeing people actually shouting for a rally, which always gets me a little bit wary. But I can't be a buyer of this market as it is in this time frame anyway. Whilst it's doing what it's doing here, it needs more of a retrace. There might be some opportunities on the intermediate time frames, the 4-hourly time frames for this, but as it's moving, as I say, need some patience. I wouldn't be looking to be on the short side of it at all, personally. It's too much upside risk. DAX is a bit more iffy. It's really just running sideways. I was looking yesterday and it was looking more positive to finish the depth of this channel. Well, it might eventually get there, but it's very, very slow and very choppy intraday wise. It's quite a mess here. You're seeing these sort of moves and the hopeful moves, and then bang, there's sell and so on. So it's a messy old market to be risking at the moment. The pound has just come off, no doubt. Higher interest rates not good for the equities in real time. And there you go, lower highs, lower lows kicking through there. So if anything, I said the pound, I meant the FTSE. So the FTSE does look soft at the moment, and if you wanted the market to be shorting, there's probably the market to be shorting. It's much more in a downward trend. Right. Okay. Yeah, I don't know why that's. I'll have to have a quick skip on the news and see if we can find why. Let's just someone else has noticed the Swissy flying, Swiss franc. Oh, they are inflation. Okay. Well, that's not. It's not massive, is it? Plus 0.6 domestic product, but plus, oh, hang on, the previous month's 1.2. There it is, plus 1.3. I thought I saw figures up here. Forecasts are plus 1.7 though. Oh, that's why it's flying, because it came under. It's alright. Just got to get the brain together. Yeah, so the Swissy, it's come under expectation there. So hence why we're seeing the Swissy pairs, Euro Swissy, the pound, dollar Swissy, pushing up there strongly. Just come back to that Swissy. Where are you? There you go. That's why we've seen these big moves. There you go on the hourly. Right. I'd like to know why it is lower inflation rather than higher inflation. Okay, I'll speak to you later. Have a great day, and catch you in the morning on the YouTube. You can join the day traders. There's a link on the bottom of YouTube if you want to come in. Use that, and you can come into the Zoom room. Bye for now. Okay, so Zoomies.